shut the doors? Thanks. All right, good morning, everyone. My name is Margaret Brody, and I'm the CEO of Rubicon Organics. You can hear me okay at the back? Great. We've seen what's happened in the cannabis markets the last few years, but I'm here to tell you why you should be paying attention again to Canadian cannabis and what's about to happen globally in terms of cannabis in the world. We now today have a global shortage of cannabis in legal markets. New countries are turning on, and there are very, very few companies that are able to produce premium quality. We're one of them. Rubicon Organics has a track record. We deliver on our promises, and we offer a compelling valuation. In particular, you look at our total assets versus our market cap and our profitability, it's there today. We have premium positioning in Canada, and we have a solid balance sheet with near-term growth opportunities, and we're looking to lean into those. We have an offering underway right now, and I will talk to that at the end of this presentation. Happy to take any questions. But we see that the industry is very aware of momentum happening. The investor is not yet aware of that. So what we're seeing is a lot of freneticism for supply in Canada and internationally, the US market being on the beginning of a down, and I'll talk about that. But there's excitement, and you can actually see value investors coming into our stock, and we've had a lot more volume this year than we had last year. So I'm gonna make you read our disclaimer, because we do have an offering up, but I know you've all read it before, right? Before this presentation, great. So our vision is to become the most trusted house of cannabis brands in Canada and beyond through elevated experiences that are through quality and world-class genetics. We want to build brands that are on shelf for 30 years. So who are we? Rubicon Organics. I'm going to assume that most of you are new to the story. We are Canada's #1 premium licensed producer, or LP, with a premium house of cannabis brands and over 6% of the Canadian cannabis premium market. We hold about 2% of national market share. We're based in Delta, British Columbia, and we're listed on the TSX-V. We grow in living soil, which is unique, and it is a key competitive advantage to why our product is premium. We hold unique IP. Today, we are the world's leading scaled organic and certified organic cannabis company. And just recently in December, we won and swept the Canadian Kind Awards, which are really the Oscars of Canadian cannabis. So we won Brand of the Year, Vape of the Year, Topical of the Year, Hash of the Year, Flower of the Year. And that is important because it's voted on by bud tenders. I couldn't go in and vote. And it's really important when you're in a market where there's a recommend over the counter. We're in our third year. We just delivered our third year of profitability, and we have a proven brand platform from which to launch our brands. This year, 2024, we launched Vape. We got to 55% national distribution, and we won Vape of the Year and Best New Product of the Year with that product. And we deliver consistent high quality. From day one, we've been committed to that. It's everything from production to cultivation to how we go out into market. And we believe it's essential in competing, especially in a dark market. And it's making us a leader in the industry. We also have a team that has deep cannabis experience, both legacy and CPG. And we believe that we're positioned to achieve high valuation models a la tobacco and CPG as we go along, and the brands get stickier. Look, the last couple of years have been very quiet and down for Canadian cannabis. There's been nobody interested, and it's actually really nice to see a room this full. And I think this time next year, there's going to be more people in the room because this is just turning on. And we believe that we've laid the foundations and we're ready for what's next. So we're driving growth in Canada's premium sector, and we're positioned for growth, and we're going to talk about that today. We've got 3 years of profitability, as I mentioned. We've got a strong balance sheet. We've got leading brands. We've got world-class genetics, and we have a really strong independent board for governance who are extremely experienced and well-known in the Canadian space and engaged. They don't give me an easy time, which is probably a good thing. So quickly, I'm going to talk about our Q4 results. It was a record year, Q4. We delivered record net revenue, and in the last quarter of the year, we were up 42% on the previous year. That was because of our vape launch largely and growth across all of our categories. We reported adjusted EBITDA profitability of $4 million. There was around $1 million of cost, one-time cost for an ERP, so we're sitting around $5 million. We swept the kind awards, as I mentioned, and our wellness brand remains #1 in the Canadian cannabis market. We've got around 27% of that market. We refinanced our credit facility, and we executed on our vape launch, and it was hugely successful. In 25 this year already, we've received a significant international certification called GACP, and we've done our inaugural international shipment, and I'll talk more about that in a minute. And we've entered an agreement to purchase a new facility. We expect that to close in the second quarter, and we're expanding. That will expand our annual production capacity by about 40% to over 15,000 kilos of premium supply. So very exciting. I like to get to the numbers right away. So here you go. You can get a snapshot of our financial picture. We just demonstrated consistent growth throughout 24, and we had an improved mix and margin as we went through the year. Again, our adjusted EBITDA here is including those one-time costs. In our adjusted EBITDA, the only items that we take out are there's a cannabis revenue that goes in it's called biological assets under IFRS. So we strip that out. We take out our share-based compensation and our depreciation and amortization, and that's it. So our one-time costs that we incur are still in here. We saw growth across all of our categories, and our working capital position continues to be strong. At December 31st, it was just under $20 million, and we refinanced our credit facility at 6.75% interest rate for 5 years with fantastic lenders. We want to build this company. We're real operators, want to build it for growth. So what's next? How do we do it? This is what everybody asks. So we have 3 flagship brands. Simply Bare Organic, which is catering to the connoisseur, cannabis connoisseur looking for new news. We have 1964, the premium, looking for the premium customer who is recruiting from the legacy market. We really want to bring those people in. And our Wildflower Wellness brand, and I'll speak to Homestead in a minute. In a market where the consumer can't see what's in the package, and you buy something sight unseen. I mean, when was the last time you opened up a beer and it wasn't good and it was off? That was the consistent experience that people had in Canadian cannabis for a long time. So to build a brand promise, you have to be really fierce about that. Otherwise, you just have a label on a package. So we believe that by delivering consistent, best-in-class quality, putting quality first, we deliver trust and a brand promise. And I think we can all see in the world that we live today, consistency and trust is something that's really we're looking for. We built our reputation and the platform of our brands off of the power of our premium flower. And we won Flower of the Year in both 2020 and 2024. Didn't get it in 23, I have to say. I was very frustrated. But that's a high bar, pun intended, in Canada. And we have a very strong and robust competitive market. So to win in that market really means something. And it goes to show how we can play as this world turns on. So our brand and Launchpad, its Launchpad has been a proven platform for what we can do. Bud tenders are surveyed by third parties the last 2 years. We were 2 of the top 5 brands, most recommended brands by bud tenders in a Brightfield survey. We launched edibles in 23. What you're going to see in my track record as CEO is I'm going to tell you something and then we're going to go out and deliver on it. So in the fall of 23, we hinted at, 22, we hinted at looking at edibles. We then went out in the spring, announced we were going out with edibles, and managed to capture almost 30% of the premium edibles market. And we are currently, in the fourth quarter of last year, we managed to be the number 5 premium edibles producer, or number 5 edibles producer in the country. That's all outsourced product, and we've done that without using the power of our balance sheet, been saving our balance sheet for the right opportunity. Same thing, we went out and did it again last year. We hinted in the fall of 23 on vape. We then went out, announced that we were coming out with vape, and managed to launch 2 SKUs in May, June, July, really into our largest market in July. We achieved 55% national distribution in the first 6 months, and I like to win. We like to do that. I like to build a competitive market. Very pleased to be 13% of the national resin vape market within 6 months. Pretty incredible. But we also won Vape of the Year and Best New Product of the Year with our Blue Dream. So very exciting. It was our fastest, most successful launch ever. And there's more to come in that category from us. And I'll talk about where that's a growth opportunity for us. It's successful because of the quality that we do in the beginning. So everything we do, we want to step forward with quality. Wildflower, same thing. We have really one dominant SKU. There's been a lot of competition enter in the last year, and we continue to win with that one strong SKU that people love and go back to. Homestead. Why is this fourth one here on this list? It's because Homestead is where we put product quality that doesn't meet our first two premium quality stories. So if it can't meet Simply Bare or 1964, we can turn it into cash very quickly by putting it into the Homestead brand. We believe true CPG brands are going to be beginning to emerge, and we have a team that's experienced in that, and we're demonstrating that through our consistent brand promise, and I'm excited about that. So here's some results that we've got. We've had double-digit growth in BC, Ontario, and Alberta. We have some work to do in Quebec, not being local there, that makes a difference. And we've used, as I mentioned, our balance sheet to drive that growth. We've been able to capture meaningful market share and awards with the bud tender love. Again, I'd remind you that everything in Canada is purchased over the counter. So you have to actually speak to someone to be able to purchase your product. So the bud tender is absolutely critically important. Execution is a big part of this game, and you can see through our results that we are executors and business operators. So what I care about as a CEO is not just executing on a product that I can stand behind. I care about the second purchase on it. So we send something into market in July. They went into our vapes went into market in Ontario, and I was asked, how are you going to know that's successful? Boy, you sold in all this product. It's not successful until I see people rebuy it. Even more excitingly is when they recommend it to others. And that's the flywheel that we're on right now. And it's pretty exciting, actually. We're currently getting calls in from all over the world. So growth in just the Canadian market. Look, we think that the Canadian market is going to continue to grow. We're seeing new adopters come in every day. 30 to 40% of consumers are still buying in the legacy market. And the new generation consumer has only ever bought in the legal market. We're also seeing significant international demand, and new markets are coming online, and there is a supply shortage. And I don't think that that's been identified. And I'll talk in a minute about why aren't you just turning on old facilities. Also, cannabis is accretive to Canada's GDP, not subject to tariffs at this time, and it's a medicine in many, many countries. So it's pretty exciting. So how do we grow our business from where we are today? Firstly, we always look to outpace industry growth, so that's just table stakes for us. We have a Hope acquisition I'm going to speak about on the next slide. We expect to increase our supply capacity by over 40%. This combined with, we have long-term third-party supply agreements that's helping us meet growing demand. We are supply constrained at this stage. Our edibles portfolio that we launched in 23 grew 185% last year and continues to show strong growth. We're excited to have a full year of vape in market. We started out with 2 SKUs last summer. We got to 5 by the end of the year. This year we've got 7 in market, so that will be a great growth lever for us. Quebec is announcing that vape is coming online. We do not yet know if we're successful with listings there, but we're optimistic. And we see vape just growing overall. This whole pie is going to grow. And in the US market, it's sort of 26 to 30% depending on the market. In Canada, it's only 16 to 17% of the market. So that shows you that there's a lot of room in there. Then it's all about leading with genetics. Very important to have new news, kind of like fashion, bringing out the next thing. And as I mentioned, we have our new GACP certification, and we've sent our first shipment internationally. Our plan for 25, given that we're capacity constrained, is a walk, crawl, win strategy. We're going to test and learn. I'm actually in Berlin next week, and we like to meet with people we do business with. We do business with people. We don't do business with brokers, and we're looking to build out that strategy. We expect in 26, we're going to have more supply, and some of that supply will be going into the international markets, which will be incremental EBITDA into our business. So what's this? This is you can see on the left, the cool picture is our Delta facility. It's the existing largest scaled organic facility in the world at this stage. It's producing, we're very excited about it, and it's how we've built our business. But we've gone out and jumped on this opportunity to buy this Hope facility. It's an hour and a half from our existing site, so operationally, we can manage it well. It has annual production capacity. The company before us that owns it has said it was 6,900 kilos. We're saying 4,500. We think that was a bit aggressive as a target. We do expect to get there probably in 27. 26 will take a minute. We're going to have the incremental costs this year from operating cash flow perspective, but we expect on a like-for-like basis of our business last year, we're going to grow our EBITDA and our revenue, but we'll just take out these costs and report them so that people can understand how much we've spent on this, because we're going to incur the cost this year and we're going to get the upside next year and the revenue next year. But this is exciting. It's 4.5 million Canadian dollars to purchase it. I walked the facility with a guy who just done an appraisal. He said it would cost at least 12 to build it today, plus the land. And then there's all the cannabis equipment. We're going to put in about 2 million, and then the working capital, and we believe by the end of this year it will be producing. We're also realistic that it takes a minute to learn a facility. So, by the end of the first quarter next year, my target is that we've got really quality premium production going out, and that my expectation, although we haven't figured out the details of which market it's going to yet, is that half of that is going internationally. So we're excited. It was the first production facility in British Columbia that was licensed federally, so that says something. We had a lot of people say, you guys should be the ones that own it. So Canadian cannabis, long-awaited shakeout is now happening. We had very uncompetitive, really low quality standards at the beginning, and some of you would have lived the hype of the ups and downs of the market. Now, where are we? We have 3 key trends. One is there's a significant improvement of product quality, but it's more stabilized within wherever you are. There's still a big gap between premium and value. We have the provinces streamlining SKUs. So at the beginning, their worldview was that they are distributors. They were listing, 6,000 individual SKUs. They are trimming that list and using Costco and Walmart style customer scoring. So not only is it rate of sale, but it's your delivery, your on time in full, OTIF scores, et cetera. We do very well in that because we care about quality. Quality is in everything you do. And then customers are becoming more consistent in their choices. So in that, they are just beginning to ask for brand, and that's very exciting. At the same time, what we're seeing is a number of Canadian premium companies, because of the cost of having a sales and marketing team on the ground and various other things, are completely pulling out of the Canadian market and selling wholesale their products internationally. Their brands are dropping off shelf. Brands are being built today in this market, and it is very high barriers to getting back on. And we're seeing that consistently. We've had friends from Quebec come visit us. They're a private company. They moved completely out of Canada. They're struggling to get one flower SKU back on shelf. So satisfying that customer and keeping that loyalty of them and delivering for them is very, very important, especially as you're building a brand promise. And look, we think that in 3 to 5 years, as globalization, new markets open up, there is production eventually that comes online. A lot of that production will be able to then go and fill our brands, whether it's domestically or internationally, I meant add. So it's interesting. This is my favorite slide next. This is the hype curve. If you've been in the technology industry, you are aware of the classic Gartner hype curve. We saw the inflated expectations, and as you come down to the side here, you're going to notice that I say US market downturn. Canada's lived this last 3 years. It's been really challenging. We had massive price compression. We had unscrupulous actors in the space and all sorts of other things. We've watched this for several years, and we believe that in the fall I presented, I thought we were here to our board. It's certainly accelerated since then. Classically, it would go up and flatten out. We're seeing, as I mentioned earlier, the beginning of like the mining supercycle of 2008, 2009. So we believe that there's going to be incremental demand. That's the blue line that we put up there. I think the US market is going to continue to be in some pain for the time being, and that's going to allow Canadian operators the opportunity to take a competitive advantage and win for a little while and actually get into these markets. It'll be curious to see if US operators actually do come up and acquire Canadian companies for that access and for those growth. I think we're starting to hear some whispers, but we haven't seen any activity on that yet. We're also seeing with this curve and with the countries in Europe turning on, new interest from alcohol, tobacco, and CPG companies. We've been told there's mandates out there to invest. We haven't seen anybody pull the trigger on anything yet, but I suspect in the next 18 months, 12 to 18 months, we're going to see that and see the growth of the lessons learned in Canada that can now be taken. And there's really good teams out there. The pack is really separating. It's very clear. So why are we different? What's our unique positioning? We control our supply, and we've just secured even more supply. We have unique IP, and we have a national route to market. Plus, we will be able to also take advantage of all the work that our wonderful competitors have done in getting the route to market open internationally, and we'll be able to walk in there. We do know that that cannabis consumers like new news, and they follow the Canadian story of where the brands are positioned. We're getting offers for our product at a significant price arbitrage to people that are just wholesaling product without having the name attached to it, because there's a promise of quality in there. So here's our market information. This is always fun to look at. Everybody wants to know how many shares we have outstanding. We've got 56 million shares outstanding, and we're about 44% insider held, which is a bit unique. We've traded as low as 30 cents. We had somebody exit a whole position, and now we're back, and I'm going to talk a little bit more about an offering that we're running right now. We're doing this offering for growth. Our board of directors has said they're in for, every single member's in for over 1.25 million. They've committed to. It's a $3 million to up to $3 million offering at a 44-cent unit with a half warrant attached at 70 cents. And look, all of this is disclosed online. I'm happy to share the information. My contact card is here. But we see that now is the opportunity to run, because in a year's time, we want to be able to deliver the EBITDA next year. So we're doing the projects this year. We could have done it all out of our working capital. I presented two options to our board. I said we can go more slowly and doing it out of working capital. We can take a small amount of capital down and run at things that will incrementally grow our business. And that's what we want to do. We're not here to just sit around and do it piece by piece. So that's everything from me. Global supply shortage, if there's one thing you take out of this, it's coming. Brand positioning and track record. So any questions? Yes.
Curious how you see sort of the geographic mix evolving, and specifically which markets are you targeting, and then just kind of potential implications for growth and margins as those businesses scale.
Are you thinking from a Rubicon perspective in Canada or beyond? Beyond. I think Australia is going to be a challenging market because it's going to have its own homegrown domestic supply. Already we're seeing a lot of supply going to Australia. Europe is not turning on facility in the same way. It doesn't have the cost of power. I heard a stat recently that our power cost was about 30% of theirs. Don't quote me on that. And that you need a lot of capital to build these facilities, and there hasn't been capital in cannabis. So for me, Germany is obviously very interesting. Our first shipment was to Poland. I'm in Berlin next week to meet with people. We're not interested in selling hockey bags of weed. That's a very Canadian statement. We're interested in building routes to market that are sustainable. And so I don't want to say I have a conclusion. I have suspicions that the UK and Germany and potentially Switzerland would be where we go. France is turning on, and I really like everything French. So from a profitability perspective, right now, they're all competing. So they're all offering similar prices in Europe. It's going to be about brand placement. And frankly, my vision would be for us to use Hope as a stepping stone for us to create the EBITDA to be a bigger business, to then get to around 20 to 30,000 kilos of premium British Columbia production that we can take internationally, selling 15 to 20 in Canada. This would be a 3-year time horizon with the remainder internationally. In my view, to compete internationally, you need to probably have a partnership with someone that's beyond, whether it's co-ownership or something, because everybody's incentivized to build their own brands. So we're beginning that journey. I think there is a lot of time, and the way we characterize it is that we're at the second leg of the marathon. We finished the first leg. We've seen, the hype cycle here. I'm sure anybody who's participated has felt this, but we have not seen the Canadian market yet catch up. And we haven't seen investment in international facility. So what does that mean as more countries turn on? It is bigger supply constraint. Yeah. Anything else? Yeah. How did we come to the $3 million target for a raise? Well, we don't need that much capital. We can do everything we want to do where we are right now. If you look at the history of how we've run our balance sheet, we've always run it with some buffer. We like to have a little buffer. It is specific to startup costs associated with our Hope facility, and we're turning on pre-roll automation as well, which should save us about $1 million a year, which would be $1 million right on the bottom line in EBITDA in 26. So we'll start to see those cost savings this year. Yeah. Yeah. So the question was about me. I've got 1 minute left, but I can talk about myself for hours. Look, I am an ex-rower, so I rowed varsity crew and the junior national development team for Canada. I'm a competitive person, and I wanted to build a business. I spent 10 years with KPMG thinking I potentially wanted to go into the partnership, and I came back to Vancouver after 7 years in the UK and felt like I was moving paper in a circle, and I wanted to do more. I went to go work in mining. It was very interesting. I learned a lot about transactions and deals, but we were buying and selling properties, and I wanted to build. And so our largest cash investor at the very beginning said, hey, would you come in? I said no the first 2 times. The third time, out of respect for him, I took the meeting, met the founder, and I became the first employee of Rubicon. I always thought that I was a great number 2, if I'm honest. And the last few years, I've really loved being in the CEO position and driving a business. We're very passionate about what we do. We think that passion, if you think about some of the great brands out there, I like to think of a Canadian brand called Arc'teryx, if you know it. It's a BC-based company. It's high-end sportswear and jackets and things for the outdoors. We want to do what we do really, really well, and I want to build a great company that BC and our community can be proud of. And I'd like to take it nationally. I also like to win. Thanks. Anything else? I'm sure I have to go, but you can catch me after, and booth 809, which sounds very weird. Thanks, guys.